We're going. Hello, everyone. Welcome to Market Trends with David Russell. I am Global Head of Market Strategy at TradeStation. It's great to be with everyone. We do these webinars every Thursday at 2 p.m. Go over some of the trends in the market and also to help you see some of the ways you can use the TradeStation platform to find opportunities, to follow the market, and to improve your trading experience. I wanted to quickly start off with some disclosures, as we always do. I'm also going to put a few things in the chat, just some quick links with other materials you might want to see. Great to be with everyone. Now, as we always do with these, you can go to tradestation.com and then you can click on Insight in the top right and go to a blog that contains a lot of the materials that we are going to be covering today. And I want to just mention that this market now is entering that kind of stage of a low volatility melt up. The market kind of goes through phases when you have high volatility or everything moving together with an index. Like for example, after the market rallied off the lows, coming out of October, the index has kind of just performed well. People looking for opportunities the upside could in many ways just follow the indexes. But then as time goes on, it gets the actual speed of the move starts to slow, and then people are going to be looking for individual opportunities and individual names. And that's kind of the phase we're in now. And one of the best ways you can judge that is by where the volatility index is, where the VIX is. The VIX back under 13, just kind of sitting back at the bottom of its longer term range, and that kind of tells you we're in the kind of market where individual stocks, individual sectors start to make sense, and the overall correlated move declines. It's interesting, in I kind of think of it as a bull market has many stories, and a bear market only has one story. In a bear market, it's like COVID or inflation or recession or whatever that dominates everything. But in a bull market, there's lots of different things. You have a turnaround in Disney, you have growth in semiconductors, you have lots of other things happening. And in a bull market, there are many different stories. And those are some of the things we want to look to do here on the TradeStation platform. So I'm starting off here just very quickly. Let's look to start with the standardized returns of some of the ETFs that we are potentially going to talk about, just so you can actually see. And I'm going to quickly show you after that. If you go to tradestation.com and you go up here to Insights, it's going to take you to a blog post. And that blog post has a bunch of the materials that we're going to be covering. Um, and let's see, this one right here. I will just start out by looking at some of the things that kind of jumped out to my mind. Well, first, let me just mention, if you click on this link, it goes to a zip file. The zip file looks like this when you go into it. You'll see this folder, public materials. If you're not familiar with this has a series of workspaces, and it has a series of these ELD files. So if you have the TradeStation platform running, you can go to the ELD files, and if you click on them, they will allow you to import these various studies that I've created. Now I've already imported them, so I'll kill that. But you would import the two ELD files, and then you can use these different workspaces, which you can see I have loaded down here. Um, so basically, that's kind of how we use that. You can also see my ideas on TradingView, which are here, and we're going to get to some of those. But I wanted to just kind of quickly mention that, I'm kind of looking out. I'm going to start at the bottom actually and kind of work up, because next week, one of the things I've been watching is retail sales and CPI. These are like the big kind of items, coming up next week. And I kind of have two ways to kind of think about it. First of all, from my perspective here, this economy is surprising to the upside in a lot of different ways. Most of the data we've seen today, jobless claims better than expected. So all those sort of things are kind of putting us in that position where we have that potential for some more kind of shifting toward these cyclical sort of names that benefit from a strong economy with low unemployment and things like that. Retail sales have beaten expectations for 6 or 7 straight. I think it's 6 straight months. We're going on potentially 7 months here. So now the question is, when we look overall, will that be an opportunity in retailers with retail sales next Thursday. The other thing is I want to take a quick look at the treasury yields because if you look at the 10-year here, it's kind of near the top of this range. And if this chops back down, that could be something that people would start to move to the small caps. And now people have been waiting and waiting for the move in the small caps for a long time, and it hasn't really come. If you look here, I'll show you the futures of the Russell small caps, but it's basically just kind of parked here, range bound, nowhere near 52-week high, nowhere near an all-time high, unlike most other indexes. And it's one of these things where as the economy's gotten stronger and the interest rate outlook has been kind of firmer than people thought in terms of rates, that's been a drag on small caps. However, I do think, from my perspective, one of the situations we could see here is we could see a situation where where the yields, they're at the top of a range now, after the inflation report, if we get a pushback to the downside and we start to get just an overall sense that, okay, we took that hit of going from 5 rate cuts to 3 rate cuts. Now we know that. Now that's priced in. Now we can kind of go back and start moving again. There could be, I think, the potential for a rotation, a kind of sell the news or buy the news. People have been bearish on small caps because the outlook for rates has been bearish for small caps, has been higher rates than we thought a month ago. That means that now the small caps have bad news priced into them. So then what happens if the pendulum swings the other way? And that could be positive for small caps. So I always kind of look at the chart levels and the things that we know are coming up. To me, next week, Tuesday CPI is a pretty big number. If people are going to look to push bond yields lower, there's a good chance it would be after that report next week. And if that happens, one of the ways it might actually be one of the more, kind of logical and liquid and kind of broad ways to play a drop in interest rates could be the Russell 2000, things like IWM, the futures, and other kind of small caps like that. So I want to just kind of mention that because I'm trying to look out into the future and plan a little. We'll be back on Thursday of next week, but before that next webinar, we're going to have the CPI on Tuesday, and we're going to have retail sales on on Thursday morning. So those two things together, we've seen this incredible strength in growth stocks and in technology, but there could be a little bit of activity in other areas next week if these events serve as catalysts. I wanted to mention that. Now, so just quickly, in no particular order, I want to just look at some of the things that kind of popped up. And there's different ways I found these. There's a lot of different ways we scan for opportunities. And every day I'm kind of looking at, things that might come up for different reasons. It might be moving average crosses and pullbacks or things like, breakouts to new highs and pullbacks. But one of these that grabbed my attention was Vertex. This company we've looked at different times. And there has been a trend here in healthcare. We're going to be getting to healthcare today. I think it's actually kind of interesting that this market has some secret kind of bulls in it. Everyone knows about the tech thing, but then underneath the hood, you also have something interesting starting to happen in healthcare, which I think is not being appreciated yet, but I think we're going to see it. And I would just say that on this webinar, like a year ago, we were talking about the explosive investment in manufacturing. Nobody at the time talked about it. 3 to 4 months later, we started seeing articles in Yahoo Finance saying, wow, American factories are being rebuilt at 70, 80% a year in terms of year over year growth in manufacturing construction spending. So that came through later, and that there might be a trend developing in the healthcare space that I'm going to get to in a minute. But first, I want to just quickly mention Vertex is a biotech stock. It is one of the healthcare names. And what's interesting about this name here is it basically had the earnings were in line, but it had rallied on the news. And now we get this kind of drop down to our friend the Keltner channel. So this one popped up because it was at the bottom of the Keltner channel. One just mentioned this. This is an area here where if you even look at how it came down, kind of held this. This had some drug news. It rallied on the drug news, good drug news, came down and held that old high. Now it's just kind of sitting here. So this is what I'm kind of think is interesting, with an outlook for a couple of weeks into the future. Another one that's interesting that we did a trading view idea on is Seagate Technology. The semiconductors remain very strong. This company, I actually want to very quickly look at my trading view idea because I thought it was pretty interesting to look at how this stock has behaved. What you really see, I have some markups on here, how basically you have this high from late November, it held that. Then you have the close of last year, and then we've been holding that. You can see it over here. This was the closing price of 2023, and you can see that we've held it this week and the 20-day moving average, 21-day exponential moving average. So for me, there's another sort of area. It's a name that has been sitting and pausing for like 2 weeks, hugging that 21-day exponential moving average. And we're seeing these kind of 50%, well, we're seeing these kind of rally, pullback, holding weekly and monthly levels. I'm going to get to some of the 50% retracement in a minute to show you some of that with the actual drawing tools. Is a little trick I wanted to show you. But this is one that popped up. Now, another name we talked about some time ago, probably about a year ago, was Carvana. We had mentioned the potential for short squeeze in this way back here in kind of May, and it certainly did have a short squeeze. Now, what's interesting is this really has gone nowhere for, it's hard to believe. I mean, what, since July, whatever that, the 8, 10 months or something. So now you basically have a stock that continues to have significant short interest. It's a consumer stock. Auto stocks have been strong, and there's been a lot of evidence. If you look, kind of on the different people looking at trends in business and stuff. There's been this big sense that the auto market is having all these troubles and things like that. But we look at the numbers from the most recent autos, and they really haven't been that bad. So from my perspective here, we have, entering COVID, we had an aging fleet of vehicles in this country, and we also had, and now we have, the other thing that we have is this strong economic environment with strong retail sales, strong consumer discretionary. So you put that together, a name like Carvana here, with the potential short interest holding this level, or holding these levels from across here. I want to put this on people's radar because this is a stock that, if you look at it over time, when you're in that lower volatility environment, it can, it can perform to the upside. It's a very volatile stock. And for people looking for things to actively trade that might have that potential to kind of move, in my view, Carvana is on that list. The other thing about Carvana that's interesting to me is that we have a series of patterns, but I would just say off the bat, the one that really grabs my attention is this descending sort of trend line that we broke through. I would have loved to have done this webinar a couple of days ago, so I was looking at this, but I kept it on my list because I wanted to share it with you guys. So this one popped up. Now, going from a kind of fast moving volatile stock to a more kind of boring name, but McKesson has been just a very steady uptrend stock. We've talked about it a lot on this webinar at different times. It really was outperforming in 2022 when the overall market was not, and this has just been a steady uptrend name. Now, again, I think I would just very quickly mention, let's not forget that one of the things we've heard, for the last 20 to 30 to 40 years is that America's aging, the baby boomers are going to get old, they're going to need more health care. This has been, a well-known, pattern or opportunity for decades. But the thing is that now it potentially, we're actually starting to see it kick in and to see the underlying growth in the healthcare industry. And that's one of the things I'm going to get to in a second. But I want to just kind of, emphasize that healthcare now is at that spot where all these years of people aging is now kicking in and driving business. And the other thing is that there was some evidence, even of things that had been deferred from COVID and other things like that, that is now completely going the other way. And people are playing catch up on healthcare. And then you also have just the natural secular force of the aging population. So a name like McKesson, you can understand, yeah, it's a healthcare stock. It's not a cyclical stock, but it can still be a secular growth stock. And that's how it's been performing. So here we have rallied into earnings. Earnings were good. They sold the news. Now, I've seen this pattern a lot. When things rally into good news, they pull back, but then 2, 3 weeks later, they stabilize. And then 1 to 2 months later, they could potentially be higher. So I want to mention this because for me, this is a name where we might want to be thinking about, you know, things down around this level, looking for it to hold between kind of like 485 and kind of 500 in this range here, that 21-day exponential. We also see the Keltner channel is still down here, so it might move deeper down to 480. But I want to just mention this name because this is one that I feel like, it just has been in a steady uptrend. And there's a lot of interesting things about some of these kind of more boring areas in healthcare. There's a pharmacy benefits company, so it just kind of benefits from the overall volume of people using medicines and stuff and getting healthcare in general. All right, good. I'm gonna continue here. Um, Now here's a name that people used to trade this one back during the days of COVID. FSLY, Fastly. You know, they have been performing pretty well. I think this was the earnings here in terms. I mean, I say performing well. I mean the earnings have been in this name. They've had some decent earnings in terms of gapping higher on the news. And so I wanted to mention this one because I'm going to just quickly pull over a trading view chart really quickly to kind of to look at it. It's a little bit easier sometimes to see earnings and stuff quickly on the trading view chart. Let me bring this in. But let me just kill these out. Sorry. Fastly here. Now remember, TradingView is one of our API partners. You can actually have money in your TradeStation account and place orders on it via the TradeStation platform. If you actually look, I mean, via the TradingView platform. And so if you actually look at some of the ideas we do on TradingView here, like for example, this thing on Seagate, if you go down here, you can actually find information about how to actually do all of that. So we do cover that, and that's something that can be a great opportunity if you're interested in using TradingView, which has the ability to have a lot of charts and stuff that are on a website, not something installed on your desktop. It's a handy way to do charts, and there's some neat things you can do with it. Um, but anyway, stock rallied on good earnings, pulled back. Rallied on good earnings, consolidated. Now we have another earnings report coming pretty soon in this one on, I think, the 14th. I think after the close on Valentine's Day or Ash Wednesday. But basically, there you go. I mean, it's one just mentioned that because we have seen some of these names with some really explosive moves higher. I mean, if you look at what's happened in a stock like Super Micro, PLTR. This is kind of what we had talked about last year. We said that we expected that what we were going to see this year, when we talked about mega cap growth, we said we were going to see the mid cap, the second tier companies start to kind of come to life and perform. And we had talked to them about names like CrowdStrike, names like Palo Alto Networks, names like Arista Networks, which were all kind of on that list. And today we have another one for you. If you look down the rundown, which is Pure Storage. I mean, when I first started looking at this, it was kind of consolidating here, and now it's breaking out to new highs. PSTG. If you actually look at our rundown, you look down here, we actually have mover of the week. Normally we only have one, but this week I wanted to do two because there were two that kind of grabbed my attention. And I wanted to share them. These are stocks that are not in a big index that are performing for some potentially interesting reason that I wanted to mention. But I think it's interesting right now that we are seeing just this incredible widening of things. And Fastly has been one of those highly volatile growth stocks that when the market is performing well, volatility comes down. It's funny that volatile stocks typically perform better in a non-volatile market. But the thing is that a name like this that is really sat for a year and a half of that earnings report coming up, why don't you put that on people's radar because this might be one of these other names that people kind of start to come back to. It's that kind of small to mid-level name, but it has a history of performing if you look at it as a growth name over time. Um, okay, another interesting name that popped up to me was um, PagerDuty (PD). This company had a good earnings report. I think it was. Let me just show where it was. It was right. Where was the earnings? It was right here. And I wanted to just mention this because this company is another one of these kind of tech names, new growth names, has some short interest on it, and it's just coming up now and trying to get above that 200-day moving average. Another one that popped up to me is Office Depot. I mean, it's hard to believe this company still exists, but ODP. Some of these retail names, when you look at, like, it's interesting to just to look at what a company like this can be. You could look back at some stocks that have significant rallies, and you look back to the beginning of the rally, and they often look something like this. They have a rally, they pull back, they build support at an old high. The 50-day moving average gets above the 200-day. And when you consider strong economy, retail sales next week, this is one of the sort of names I want to put on people's radar because this is one also that is, if we were going into a recession, it would be different. But companies like this, if they're not going to blow up and really roll over and die, then you get that spot where a lot of them are at low valuations. And the thing is that now as the economy kind of improves, these guys are in that spot. They have the stores. They're ready to capitalize on stuff. They've spent the last 5 to 10 years closing stores, rationalizing their business. And now if the business cycle kind of continues to improve, there's these certain traditional retailers that are positioned to capitalize on that. Another one that I had been looking at, and it ran away before I could do anything on it, was Williams Sonoma. It's another kind of example of, you can just see how it kind of plotting on. And if you even look at how this held here, right? It's not terribly different than what you now see on ODP. So I just mentioned this stock started to rally. It just couldn't break any lower. It found support at old resistance, and it just started grinding higher. I do think it's important to realize, as Americans, we kind of forget what a cyclical growth cycle looks like. We're so accustomed to secular growth of low interest rates, of cloud computing, of IT. But this market, especially before the financial crisis, you could see growth stock, you could see retailers getting squeezed higher, you could see industrials moving. And that kind of trend is starting to reappear. And I think it's important to be looking at some of these other sort of areas. AAOI, this is a highly volatile stock, but it is also, they do fiber optics. It's interesting to look at, just a name like this. Wait a second. Yeah. I wanted to mention this one because, look at how it's getting back above the 50-day moving average. This company is also, a company that's going to be economically sensitive. They do hardware. So this is one that's on my list. Some others that were just popping up were things like Century Aluminum. Now, the materials, again, if we have that little bit of a drop in interest rates after CPI, a company like this, again, what do we see? It's kind of holding above old resistance. That 50-day is rising. This is a highly volatile stock that, when things go from bad to good, it has a history of kind of making dramatic moves. And I think these are some of the names that people might be starting to look to in this kind of environment for people wanting to do some active trading. Another name. All right, so we had done a trading view idea on Jabal Circuit, and I want to just kind of point this out. You guys might want to follow some of the things we do here. And Jabal JBL. I mean, this was very interesting to me. Let's look at this. This has been a corner of the market that has not gotten the attention when you look at its performance. Look at Flextronics, CLX. It used to be called Flextronics, CLS, Celestica, Sanmina. These are manufacturing companies that manufacture all kinds of electronics, not just smartphones, but all kinds of just stuff you buy. They're not actually made by the company whose name is on them. They're made by companies like Flextronics. These companies have been really outperforming, and these are cyclical stocks. They're going to benefit from things like, demand, orders, things like that. And if you look at the most recent data we saw, the economic data, it did show strength in that part of the market. So I want to just emphasize that the last set of economic numbers, the Institute for Supply Management numbers, and all those sort of things are showing that the economy, we look at that last jobs number and everything else, we are seeing cyclical growth in the economy, and that is going to draw on capital goods. These also are kind of like industrials. They're not really industrials. I think they're tech stocks if you actually look at them, but I mean, they're manufacturing companies. They do poorly in a recession, they do well in an expansion. All these have been moving, but the one that grabbed my attention, like I said, was JBL. Is a member of the S&P 500. We did a trading view idea on it. I don't have the line on here, but you can see over here it has this falling trend line. This is a bullish earnings report, rallied, had this basically, this is a quick little trend line you can see, got above that trend line, which was interesting, broke that trend line, and then look right here at this level. This level from the last day of the month, it got above that resistance. It stayed above that resistance. It sat, and now it's accelerating. So this is one I think is also interesting. This name has really gone nowhere since like September or something. So I think this is one that's kind of interesting to look at. Next earnings report is in March. What's interesting about that is we have more than a month until earnings. When you look at everything else, will this be another stock where they buy the rumor and sell the news, which means that the buyers may be in control in an environment like that. In a bullish environment, there's the potential for people to kind of buy the rumor of optimism and rally toward the event, and then maybe take profits after the event, like they did in AMD. AMD was a stock that had all this optimism, rallied, earnings came out, and now it's just kind of, and maybe That's the sort of pattern that we could start to see in some of these names. Maybe that's what we're actually seeing in the other one I mentioned, like Fastly. Another one that's been running like this that I haven't talked about so much with you guys. I did it with someone I talked to the guys at TradingView was DoorDash. I mean, this thing has just been accelerating higher. I mean, at this point, I see. I mean, there's no kind of risk reward in this. So this is another one that also, I mean, kind of got above these old levels, came down and held. There were just no sellers. Again, if you look at the new kind of economy, if a company like this survives, will it one day be in the S&P 500? I think that's really the question for a lot of these companies. Will these one day be blue chips of some kind? And I had mentioned this before last year when we talked about Uber. We said, at a certain point in time, it's hard to imagine a company of the public prominence of Uber not being in the S&P 500. And sure enough, it got added to the S&P 500. The same thing was true of Airbnb, which I think reports earnings, yeah, next week also. But anyway, you know, this is the kind of time when you need to kind of, fast forward your brain to the year 2028 and say what stocks are in the S&P 500. And the reason why people might want to do that is because that is what long-term growth investors do. And they say what company is going to really be an important major growth company at that point in the future. And I think these narratives are now kind of coming together in some of these. Another company just popped up on my CRBG. I don't even, this is some kind of life insurance company, but again, it came up because it rallied to a new all time high and then it had the Keltner pullback. Now, the other thing is the Keltner pullback, meaning it held the bottom of the Keltner channel. We do have this tool over here on our price grid. Actually, no, I got to add my S&P stock. Sorry. So if you go here to your, I'm going to go here very quickly to my price grid. I'll go to data, add symbol list S&P 500, go to MA tools, data, add S&P 500. The reason we do this each week is because the S&P changes a little. Some company just changed its ticker or something. I think it was, I don't know. There's a new company in the S&P. The ticker is DAY, day. I think it used to be Ceridian or something or C Day, and now it's just day. But anyway, they change frequently. So each time we do this webinar, we reload the S&P 500. But we have this thing in here called Keltner pullback that we've given you guys on Price Grid. And this allows you to see stocks that are at the bottom of their Keltner channels. So a name like this, it's a very simple method, but in a bull market when things are trending, it can be a way to find those names. And, like I said, TradingView is kind of cool, but the thing I love about the TradeStation platform is you have radar screen, which is like, one of the greatest inventions. I mean, I think it's greater than the iPhone. Maybe I'm crazy, but I love it. And the great thing about something like radar screen is you can pull up a whole list of stocks and you can just kind of go in here and you can see stocks that are near the bottom of their Keltner channels, and then you can kind of find kind of potential opportunities based on that. Like I'm just going to cisco show you. Let's see what Cisco's even doing here. Cisco, according to this, is at the bottom of its Keltner channel. I mean, I haven't looked at Cisco in a long time. Ugly chart. Anyway, see, it's at the bottom of the Keltner channel. So the thing is, you can have a list of stocks and you can sort them by seeing where they are. Now, the Keltner channel takes the average true range, which is derived from a kind of price range, and it projects it up and down off the 20-day simple moving average. That's the normal way it's built. So very often stocks that are trending a certain way will hit the bottom of that Keltner. And we just talk about that. One of those, one of them we had talked about last week, and it actually did very well. But Toyota, I mean, Toyota was one that came down, held the bottom of his Keltner. We had talked about this. We said of all the automakers, the one that had the most interesting chart was Toyota Motor. And I think, if this was on stage, she'll throw tomatoes at me and say, "How can you talk about a stock as boring as Toyota?" But the thing is it was holding the Keltner channel, and a lot of the other things we had looked at were kind of in place on this. So one that mentioned that if you actually go here to the actual blog on Market Insights, you can see we actually did this article about how Microsoft could now be surpassing Apple on a long-term perspective. The reason is very simple. In the period of time between 2003 and 2020 or something like that, 2020 or 2018, it was about consumer driven. It was about iPods and iPhones that drove everything. But what's really interesting now is if you look at Apple, it is not, it hasn't, I mean, at least so far, let me see, it has not broken out to new all time highs. Look at Microsoft, it has. if you really think about it, what has more growth potentially in the future? Smartphones, when everyone has like, I have like four smartphones sitting on my desk, like old ones. Like I don't use them for as a phone, but I mean, I think we all have these things. I use one for, I use it like just plug it into my Bluetooth speaker. I use another one for, you know, for whatever I use it for. I use one as a real phone. I use, we all have like 10 phones lying around. So is that a growth area or is AI cloud computing, which is now kind of it like where the internet was in 1995. Which, if you really were to project into the future, what do people see greater growth in? And I think that is it. The chart is giving you everything you need to know about the fundamentals. Microsoft broke out to a new all-time high way back here in November. It held, it got above the old high, it stayed above the old high, it went on to make another new high. And that is the sort of thing that I think, this is what it looks like when something is in a true growth uptrend. It makes new highs and it makes new highs. It holds above old highs. Then you look at a stock like Apple, a company that's in distribution that is no longer a strong grower. It doesn't get above the old highs. It stays under the old highs. It doesn't participate when others do. And I think it's important to realize that this has become relatively clear in the last, especially the last 2 quarters, that Microsoft now is asserting that kind of dominance as the kind of uber uber like mega growth name in the universe of stocks right now. And we talked about that. It's on the chart. We did this article highlighting, you know, Apple below, Microsoft above. But then we have Toyota also. I mean, I'm sorry, folks, but Tesla hasn't made a new 52-week high in a long time, and Toyota was making new 52-week highs, a long way along here. So I want to just mention that. When you look at it, it makes a ton of sense. I mean, the fact is it one way or another, every day you see some other article about how electric vehicle demand is weakening. Let me just tell you right off the bat, BWA, Borg Warner, they put all their eggs in the EV basket, and it really has not worked out very well. They do like different auto parts, and bad earnings here, bad earnings here. Um, this is one that is really struggling, and I want to just point that out. Then you look at a company like Toyota that's been able to pivot so quickly, and has that strong balance sheet and the low valuation. So I think right now we're seeing some significant sort of change here. And I think it's also important to realize that when a growth stock is broken, that is a people often lose money trying to buy them again. And I just think it's important to realize now that Tesla has a lot of issues. I think at this point, including the fact that Elon Musk. I mean, we still don't know exactly. I'm not sure if he's resolved this whole, leadership thing and all these other things going on right now. So I think when you look at it, like, Toyota's at new highs, Tesla is not. I don't know how else to say it. So, but we had just mentioned it. I think last webinar we had talked about the what we were seeing in the auto. So I think it's important to realize we're seeing some real change here. And as money leaves Tesla, does it go to names not just like Toyota, but does it go to Pure Storage? Does it go to Supermicro? Does it go to some of these other names that we've talked about? So that's just a kind of thing to think about. Just some other ones that just look to me kind of rough on the overall, potential downside was wheat and precious metals. Now, I think it's important to realize that, gold here really is looking pretty difficult, and I think, this is not a good environment for gold for many reasons. I mean, you can look at the situation in the Middle East, and I mean, it's a sad situation. It's something I'm sure a lot of people have feelings about one way or another, or whatever it is, but it's not something that has a real impact on the market unless we start to really see an impact on oil. And your oil is pushing higher today, and I'm going to briefly get to that, but I did want to kind of just mention that we're not in an environment here that is good for gold. And there's a gold and silver stock with a lot of space down to 38, and this thing trades a decent amount of options. So I want to mention this one because, from my perspective here, the everything going good environment could set up some potential downside in some of the precious metals. They tried to rally on hopes of a dovish Fed, and that is not panning out. And now they're in another pickle, which is the fact that we're in a secular bull market on the S&P. The S&P is breaking out to new highs, and historically, that has not been an environment that favors gold and silver. And so I think this is a name on the downside, the point that's popped up to me, getting under that 50-day with that space potentially down to 38 or lower. Another downside name, I'm not sure why, but Carnival has just been ugly. I think these I've been just kind of watching these stocks. These guys have a lot of leverage, and I don't know exactly what's happening with cruise ships, but I'm actually of the mind now that I think we could see some upside in oil. And I want to just kind of mention because if we don't get rate cuts, these guys have a ton of debt, and they could have some downside risk. So I just look at this one. You have this big range between like kind of $20 down to like 11. It's right in the middle, and I want to just kind of mention that this is just a kind of drifting thing that might have to fill that range. I've just learned when ranges are in play, I mean, they often you're just going to fill that whole range, up and down. And then the other one is just PayPal. I mean, this thing, just kind of just a spent story. And in my view here, this is one also that trades a lot of options. And over the longer term, a move to 50 or lower, it probably is not out of the question because this is a company that, when you really look at it, it's a commoditized business, and it's just, I mean, everything about the chart suggests that it's in a pretty significant long-term downtrend here. So I wanted to mention PayPal as one that might kind of sit and chop here, kind of between 56 and 58 for the next 2 to 3 days, and then continue to the downside. All right, I wanted to show you something here with the semiconductor index SOX because it did a little something that I thought was pretty interesting. Let me actually go over here to this. I have this other chart for kind of intraday stuff, easier to see things. But I want to just show you this thing. Now, let me just tell you, I really don't believe in Fibonacci, and it's because, I mean, to me, it's just a bunch of the numbers themselves don't make that much sense. Um, I mean, to think that something has to go to 38% or 63. I mean, it's kind of a nice benchmark, but what I do think is interesting is the idea of a 50% retracement, and you find that using the Fibonacci tool. So I thought that's interesting. So you look at the semiconductors here. I'm going to just change this actually to, well, I got to just do it like this. All right, let's just drawing and then go to Fibonacci price retracement lines. And you just go, if you look at this rally from here, look at how it held pretty much that 50% retracement. And that was pretty interesting. It went down and it basically held the 50% retracement and then continued higher. So that was basically this move right here. And so I want to just kind of point out right there on the six, you see, this is the same low right here. Had this rally off the low, held, and then continued. And in an uptrend, often that's what matters. It's two steps forward, one step back. That's it. And if you see things holding 50% retracements in an upward trending market, from my perspective, those have often been pretty strong signals of things remaining in a kind of bullish spot. Um, so I mean, now the other thing I wanted to show you in the TradeStation platform is you can go in here and you can just set your Fibonacci retracement to only show you 50%, right? And then you can make it like stronger. You can make like a big like green with something really standing out like this or something, right? And then it'll always pop out if you draw 50% retracements. So that's just a little thing I wanted to show you because I'm noticing these 50% retracements are kind of working. All right, now speaking of semiconductors, we had today ARM holding, another just AI blowout sort of thing. And I think, at this point, we are seeing Supermicro, ARM, and Palantir. Palantir is a name that a lot of people didn't believe in, but last quarter was essentially transformational because they did come through on the enterprise side. So I think right now we're looking at some of these names where, again, people looking 3 to 4 years into the future and saying, what are the household big names going to be? I think Palantir, with this earnings report, might have put itself in that list of being a company that's real. And so this was interesting to me to see this report. Obviously, it's running very aggressively here. Things like Super Micro, and some of these might not give opportunities now for several months, even. But I think the thing that important to realize is that we're now at a spot where it seems that we've established some a new paradigm is pretty much it's there. It's pretty clearly established, and people are going to be potentially going back to those names and looking for them as true long-term growth names. Okay, I want to quickly actually look at the euro here because I did mention the thing about gold, and I do think it's interesting if you look at the euro. Look at how the euro has basically been trying to hold this level, and to me, I think this is also just Um, it's looking bearish to me. I mean, I think the situation in I don't want to say overly bearish. I mean, we don't do currencies here per se, but I'm saying is this looks like we could have a situation now further downside in the euro, which would be bad for potentially for gold. So I want to mention, and the reason I say it looks kind of bearish is that there's also a falling trend line. So if you kind of look at this situation, we have the falling trend line, we have this support, and if you look at it overall, though, like on the like a 2 week chart or something, you can see that this is really a, a very indecisive, middle of nowhere sort of thing. And I think if you look at this environment, the American economy is surprising to the upside, and the European economy is all over the map with different kinds of issues and things like that, and risks of things like the war in Ukraine that doesn't seem to be going away, or it maybe could have bad things, things maybe coming back into the news in a difficult way next year, or I mean, in coming months. So anyway, once you put that out there, to me, I think there's some kind of potential here, and we've seen this. China's been struggling. Now we have trouble in Europe, and then what do you have? You have strength in the United States. It has similarities to the late '90s when you had the Asian debt crisis, and when you had just a lot of strength in the U.S. dollar. So I think it's important to realize that the global thing, for the most part, India is doing pretty well, Japan's doing pretty well, but the United States is really, kind of, stepping up as coming back as a real strong global economy at this point in time, and that could argue for a potential breakdown of the euro here. Now, again, we don't do currency trading here, but I want to just mention this because this could kind of fit into the point I was making about gold miners, things like wheat and precious metals. Um, so with those big events next week, things like CPI and things like retail sales, I think this is something to watch, and just realize that this could be, I think, this could be a potential for this longer term, multi-month period of consolidation and indecision. To actually, I mean, really look at this. I mean, this has really been a year of neutrality. It had, this the euro. This is when the Fed was hiking rates. It had this big rally. This is when COVID came and the Fed gave a bunch of money. But look how it made lower highs. Uh-oh. Hope you guys are still there. I had a small issue with my screen. I hope it didn't hurt anything. Anyway, the euro made lower highs, and all right, and now more lower highs, very tight. This could be setting up for something of a significant, kind of um, decline in this sort of move. There's just no sign here of the euro wanting to do well. And if you look at the dollar index, I think it's kind of interesting. Let's look at this on a monthly chart. I mean, it's interesting to see holding, you know, with something of a potential to have made this lower high here, but now it's holding this level from before COVID. This is to me something to be kind of aware of as a bigger picture thing. And I know a lot of people may don't like things like gold miners and stuff, but I think gold right now, there's a lot of people, gold is trying to hold on to 2000. And, if this thing breaks back to the downside here, I think there could be some real kind of consternation, and this could be some opportunities here. And it seems to me that the levels are fairly clear. It's just barely above 2,000, and also the macro environment with a strong U.S. economy, strong stock market, all that stuff. It could be setting up where the risk reward favors more of a downside there in gold. Um, all right. Let me now jump over to some of the articles I wanted to talk about that are also highlighted in my blog post here. Let me just kind of go through. Let me just, I guess, quickly mention we have something of this kind of channel in the S&P, and I think it's important to just realize I'm going to show the picture, not the platform, because I have it all marked up here. But this was the old high was kind of around here from early 2022. I think it's extremely important that we made new support above the old highs. We didn't go back and retest 48.18. We basically held maybe 10, 15 points above that when we broke out. Um, we broke. This was a breakout. 48.18 was the old high right there. And then look, we rallied up and we basically made a weekly low. This was a weekly low right here, and we held it. We rallied, and then boom, we came down and we held it, and we basically had a kicker. When you smash down, and then everyone sells, and they think it's gonna be terrible, and the next day it comes ripping back. That's a kicker candlestick, and that's what we had. Held that tight low, surge back. Then basically here we go up here, rallied above the high from before the Fed, got above it, tested under it. You can see that long tail, tested under it, but didn't want to give up. That was an inside day as well. Continued higher. This here was a bullish inside day, continued higher. And now today, if I'm right, I think we have another inside day. Inside days are continuation patterns. They're not reversal patterns. So all these things to me, like I've talked a lot about how this environment, in my view, just has so many similarities to that period, the various moments in the 90s. And I think that I'm right about things, I'm wrong about things, but when you're right about something, you want to kind of stick with it. When you're wrong about something, you want to get away from it quick, and cut your losers and let your winners run. And in my view here, this interpretation of the stock market has been a winner, and it continues to be confirmed in my view. And I think it's important, like I said, to realize that we have but it's pretty much here a well confirmed breakout. We have multiple weekly closes above that old high, and we're building new highs above new lows. We're building new lows above the old highs, and as I'm saying, this to me is something that you. It's very difficult to find anything particularly bearish in this chart, and I mean, to me, I'm looking at this, and there's not anything all that clearly bearish. When RSI, kind of goes overbought, and then it just pulls back a little and goes right back to overbought. Go back and look at the charts. We've done this before from 1995, and this is almost exactly what it looked like when the market was beginning the great bull run of the late 90s. It's very similar technicals. All right, now another one we had done here, I want to just really quickly mention, but it's interesting. Industrial stocks breaking out to new all-time highs. People not looking at it very much. If you look here at XLI, for example, this thing has just been quietly breaking out. Railroads and things like that. We talked about United Rentals. One that's on my mind here, and this is not super active. Unfortunately, these names are not all super actively traded, although United Rentals often is. Look at this ascending triangle in this name. This is a name that people can really, I've seen momentum trade this thing a lot. But another one to me that is maybe a little bit less of a trading name, but it's Textron. I mean, we had talked about how it was just parked under this was, believe it or not, an all-time record high. It sat there for like months and months and months, broke out on strong earnings, consolidated again, made a new high, well above, made new lows above its old high. I mean, this pattern, it didn't even pull back to touch the old high. It just held above, continued. 8-day exponential moving average, continued. It's above the Keltner channel, doesn't care. This shows rapid, aggressive, new accumulation by new money. And it's again Textron. They make Bell helicopters. It's an industrial, and you got to think at a certain point in time, Boeing's with its planes falling apart and stuff, and then you have a name like Textron getting momentum. It's kind of interesting just to be aware. It's like Tesla and Toyota. So I think it's just something I want to mention here. But industrial hitting new highs, and this is something that I want to just mention because um, this is consistent with a cyclically strong economy, um, and can support maybe things with higher rates. So very quickly, all right, there's an interesting article I saw. There was just this note basically saying that the digital advertising market is kind of taking off again. Again, a strong cyclical economic environment will likely be consistent with increased ad spending. And at this point in time, I mean, if you look at the reports from Snap, which were horrific, I mean, Meta is just destroying everybody. And so the fact is that they're in a spot now where they control so much of that market, and an improvement in that market is another thing behind their cost cuts, besides the cost cuts, besides the innovation with AI, you also have a cyclical growth thing happening here. Okay. Um, Next thing I wanted to mention, China is doing what it can to prop up its market. Now, we have talked a lot about the structural problems in China. They have borne out as expected. And we had another, I don't know if I have it here. Here we go. Chinese producer prices just remain really bad. And again, I mean, China right now, it's just to me, this is a well known model of a debt, death spiral when, lower asset prices lead to less lending. Less lending means people can't buy assets, that means lower prices, and then this spiral just goes. I mean, it's happened in markets many times over. I mean, going back centuries, and we've seen it before. And there are other countries like this. I mean, Japan was like it. There have been other countries in history that got flooded with cash from an export boom. They start lending money everywhere. It goes into real estate, speculative stuff, and it blows up. It actually happened in the United States. Part of the things in the 1920s that really happened was the United States was flooded with cash of gold, and then basically it spurred a real estate bubble, which was a big part of the Great Depression. Was that there was a real estate bubble and also a margin lending bubble of people lending on for stock investing, um, and it was because we had all this cash because we exported all this stuff to Europe during World War II, and it built up our economy, put a ton of money in our banks, and we got a debt thing, and it blew up and blah blah blah. Well, this is happening now in China. It's a well-known problem and it's not going away. So I think it's important to realize this. And in my view, though, this remains a positive overall for risk appetite for two reasons. First, money is leaving Chinese stocks and it's going to say, you know what, America's safer than China. The other thing is it creates deflation and can kind of help to, moderate global prices and keep oil from rallying too much. So, I want to just kind of mention this. China is doing different things like saying you can't short sell and things like that. But ultimately, these are just band-aids. They're not gonna. They'll have an effect for a few weeks, and often, like I think we had actually said this at the time. We had kind of mentioned, look at the FX side, like the Chinese ETF. I think this last webinar we had kind of mentioned this rally was likely to have continuation to the downside and things like that. So I think it's just important to realize that these sort of moments, when you have established downtrends, can be opportunities to go the other way. It just kind of puts you back up into, you were oversold, now you're back to a less oversold condition, or you're back up in the trend, or you're back to an overbought condition within the context of a downtrend, and that can give that opportunity. Again, we have these moving averages and stuff to help show us that. In other webinars, we talked about how you can use the moving averages to know those things. I'm not going to get into that now because I don't have that much more time. Um, this is kind of interesting. Citi is saying that AMD is going to do better than we thought. Want to just mention that. Um, I'm not into the exact day by day of what each of these big tech stocks are doing. From my perspective now, something like AMD, it ran really hard into the news. They sold the news, and maybe it can kind of drift for a while. My perspective would almost be that a name like this can maybe drift and take a dive to an oversold condition. Again, Keltner channel might be nice for viewing that. Um, can take a dive to an oversold condition, and that could be the opportunity. So this is one here. If you look at it, it's right at that middle of that Keltner channel. So maybe one day AMD on your radar screen will have a zero on the Keltner channel pullback, which means that if it's at zero on the Keltner pullback, that basically means that it's at the bottom of its Keltner channel, like this one Humana. See, if it shows a zero, I mean, but you can see it's at the bottom of the Keltner channel. So it's been a pretty ugly stock. Anyway, but we had mentioned that of Applied Materials as well. It was at the bottom of the Keltner channel down here, took off. We had mentioned last webinar that was one that was actually kind of viewed as another kind of potential opportunity, and is continuing higher. So, but anyway, AMD here, in my view, it has that short term. It's had a lot of giddiness in the short term, and now the opportunity might be being patient and letting it kind of go from bullish to neutral to short-term bearish, have probably a stab down at potentially just a quick drop, a dive for a day or two, and then money comes off the sidelines. That's what a name often needs, like that, after it's had that kind of move. But still, it's interesting to see this note saying that AMD is going to be better than they're saying, and that's a typical thing when you see the tech stocks. They basically understate the strength of their earnings, and then you wait till after the earnings, and then it can potentially rally into that next set of earnings. This is the thing about ARM. Again, big AI demand in this name. Um, strong forecast. AI is boosting sales. I mean, this is something now that I think we've seen so much of that it's pretty well confirmed at this point in time, and the trend could spread. This is interesting. So basically, there was the Semiconductor Industry Association. If you guys look at this, you could just Google Semiconductor Industry Association, and then if you go up here to news and events, you can find this article from the 5th. But they basically, had an unexpected growth of in December. Rebounds late. It was the December number was a surprise. There we go. So this number was not expected to be as positive. And then Citi put out a note on that. So again, this note was back on the 5th, and semiconductors continue to new all-time highs today. The SOX, the semiconductor index. So again, um, when things are bad, people usually in the beginning underestimate how bad they are, and that's why they surprise the downside. And when things are good, it's the same thing the opposite way. And we're in that spot now where people are just catching up with the reality of a strong sort of demand cycle in semiconductors. Okay. Um, okay. Healthcare, this is in there, but basically it's really interesting. Healthcare year over year payroll growth in the healthcare industry used to be like, 1 to 2%. Now it's up at 4% year over year payroll growth. So what I'm saying is the baby boomers, the secular growth of healthcare spending seems to be happening. And I think that's really an important thing. Also, look at the XLV. We showed you the disclosure, the standardized returns on these. The XLV is a healthcare ETF. Now, this thing is, not something anyone actively trades, I don't think, but it is going to a new all-time high. So, like to me, this is kind of interesting to see here that money has been quietly sneaking into the healthcare names. And I think it's important that we see, first of all, this shows that there's more workers, and if there's more workers, there's probably more work. The other thing is that if you actually look at the earnings from Humana and CVS, I mean, I think Humana was, you know, really ugly chart here. Um, they basically said, well, people are spending, they're overutilizing their health insurance. Well, that might be bad for Humana, but it also means that the doctors' offices are getting more business. It means the medical device companies are getting more business. It means potentially the drugs are getting more business. The the um, the hospitals, all these are in the healthcare space. So I think it's important here to real. And at a certain point, these companies will raise. I mean, it's unfortunate maybe for everyone, but they'll raise premiums and everything else, and then they'll maybe play catch up. For right now, the cycle's not in their favor. But I think the key thing here is that the healthcare industry is surprising to the upside on volume, and we're seeing some interesting activity. If you kind of look here in the medical device stocks, we mentioned some of these that are kind of happening. Zimmer Holdings, let's see how that they report earnings today. I didn't even know what they were doing. They had bad earnings. But the other one that's interesting is Medtronic. Was interesting to me because Medtronic here, had a good earnings report back here, and now basically a lot of these other names are coming to life, and their reports on the 20th. So anyway, I think this is kind of interesting to just be aware of under the hood here. We're starting to see the medical device stocks really kind of come back to life. And that's another thing that kind of makes this market go beyond just like big tech and stuff. And it also means if some of that big tech starts to pause, the strength has been industrials and healthcare are this kind of hidden part of this bull market. I thought this was interesting because Maersk, the big shipping company, basically said, "Oh yeah, that whole thing about the Red Sea and everyone's worried. It's really not as bad as we thought." This is a Baltic Dry Index. Now, if the Red Sea thing was such a problem, why is the Baltic Dry Index of shipping costs not higher? Again, this gets a lot of news. It is a politically, big subject, geopolitics and everything like that. But it's not bearing out in the numbers. So I did want to mention that just very quickly because oil right here is in a spot where it's starting to squeeze higher, and the inventory numbers were kind of mixed. But I think we're in a spot here where I'm not an expert in geopolitics or anything, but it seems to me like from the last thing I saw, I'm not sure if we're that close to the situation, improving over there. And people had kind of assumed it'll go away, and maybe we're spot here with the combination of the strong economy. Inventories are relatively tight still, We've already kind of priced in the idea of China being weak, but with the strong economy and the risk of kind of continued geopolitical stuff that's not going away, I think here, there'd be a spot here where energy might actually kind of have some strength. And I want to just kind of point that out. I'm not overly clear on it. But I talked a lot about the risk in energy, and I just think right now we got to kind of realize that with the strong economy and everything else, things might go a different way. Um, we do have inflation next week, and the key thing that stands out to me though is that this is a now casting from the Cleveland Fed, and we're still looking at core CPI coming. It's going to be under 4 again. It was a big deal year over year when it went under 4, and it's just kind of continuing to trend lower. So from my perspective, even if it's a little bit hot month over month or whatever, I think that people now there seems to be an understanding of the of this process of deflation is underway, or of disinflation is in place. And I want to just mention that because even a hot CPI report, even if it has a little bit of a pullback, I mean, like I said, this market is in, it seems to be a pretty established period of accumulation at this time. Um, this is interesting to look at Conoco. I want to mention they had a strong earnings report. That there is a rotation toward um, toward energy stocks. Those are the main things I wanted to show. I don't have that much more time. I got to go here, but I did want to just remind you guys we are going to be back on Thursday of next week at 2 p.m. same time. Remember to check out our ideas on Trading View and to check out some of the stuff we do in the Market Insights blog. Great to talk to everyone. I'll see you again next week. Thank you very much.